The demand for loans from banks has been increasing continuously for the last few days, as if there is a competition to take loans. And this is at a time when loans are getting increasingly expensive. Since May till now, the Reserve Bank has increased the policy rates by 140 basis points, and after the increase by RBI, all the banks have made all kinds of loans expensive. Personal loans including home, car and education have become costlier. Apart from these, debt has become expensive for industry and the government as well. But credit growth has remained in double figures for a long time despite costly loans. And in the last 3 fortnights till September 9th, credit growth has been recorded above 15%. In the fortnight ending September 9th, the growth was more than 16%. Last year's base effect is also believed to be the reason for the increased demand for loans. Last year, there was not much demand for loans due to the COVID pandemic, but this year the effect of corona is over and the economy is recovering. With this recovery, the demand for loans is also increasing, and the demand is more for those sectors which were the most affected due to corona. By the end of July, the demand for loans for the service sector has increased by more than 16%. Along with this, the demand for personal loans has also increased by more than 18%. Talking about the industry, only small and medium industries have been taking loans. Growth is not much for big industries. And even in those big industries, there are many sectors where the growth of credit has decreased instead of increasing. By the end of July, the demand for credit in the industry dealing with ports has been lower by about 30%, more than 12% in the petrochemical industry, more than 10% in the railways, and there has been a decrease of more than 3% for credit in the construction industry. The demand for credit for the sugar sector has also come down. This means that the demand for loans is not balanced. While in some sectors the demand is higher, it is decreasing in the rest. Although the total demand is more than last year, people are not shying away anymore from taking loans even at high interest. In such a situation, the challenge has increased for the Reserve Bank. RBI is continuously increasing the interest rates to reduce the cash in the hands of the people to control inflation. But people are also taking loans at expensive interest. This is the reason why banks are now facing liquidity crunch, and in this week's upcoming meeting, the Reserve Bank can also take steps to correct all these aspects.